In a previous video, I showed how my Super Oversold trading strategy has an incredible win rate. Since 2006, it's never had a losing trade on target. This includes the great financial crash in 2008 and the COVID crash in 2020. It's also had a great success rate on Pepsi as well. However, it hasn't done quite so well on Centrica, a UK energy company. Using the Super Oversold strategy on this stock, we would have lost nearly 12% on every trade we placed. This trade here was one of the worst. We would have lost a hypothetical 60% from this one. What if I told you we could do better? So first of all, what is the Super Oversold strategy? We simply look for a stock making one of these oversold signals. A 52-week low, a 50-day low, a Williams percent range reading of less than -90. If you haven't heard about this before, then I have made a video about it. Or a large gap down of between 3 and 15%. So when we encounter one of these signals, we don't buy the stock. What we do is we set an alert for 20% below the signal price. If the stock reaches this price within 1 year, then we will buy the stock. And we'll set a profit target of 5 to 10%. So how can we improve the strategy? One of the parent signals is not performing well. So if you remember, we were using 52-week lows, 50-day lows, Williams percent range, or large gaps down. Can you guess which one is not performing so well? So I have data for over 950 stocks and ETFs. And here I've just checked the data from 2010 to mid-2023. That gives all of the trades enough time to complete. So I've sorted the parent signals for this strategy by the average percentage return and also the win rate. So we have two clear winners here, the rate of change and the 52-week lows. So these are the parent signals. And gaps down have done okay. There's various different data about these. One thing that stands out is that the 50-day lows are really underperforming. So they've only returned an average of 7.77%, which is way lower than 52-week lows or the rate of change. Just to show that these strategies do have an edge, here's all of the signals, and gaps up haven't generally done as well as gaps down. So there's quite a lot of data here. It might look better on a chart. So I have plotted the average percentage win against the win rate. So ideally we need a parent signal that is giving us a good percentage win and also a high win rate. So strategies over here are doing better than strategies over here. So it's immediately obvious that the 50-day lows just aren't doing that well. By contrast, the 52-week lows are doing a lot better. And look at rate of change. It is punching well above its weight. I should just point out, if you're into statistics and things, the R-squared for this relationship is quite good. So there is a pretty good relationship between percentage win and the win rate. So I have put a change into the algorithm for Super Oversold. So now it removes the Super Oversold signals from the chart if their parent signal was a 50-day low or a Williams percent R. And we're keeping those with the 52-week lows or the rate of change. So this is the bad performer Centrica. Incidentally, it has a lower loss now because I did take out the gap down signals. So this is using the parent signals of 50-day lows, 52-week lows, and rate of change. But if we take out the 50-day lows, then now we have a positive expectancy, so we would have gained money on every trade overall. It still hasn't performed as well as the other stocks, but at least we're no longer losing money. So the big change now is that we've lost this trade, which was from a 50-day low, and also this trade. I think this one was a really big loss, so by avoiding this, we have done an awful lot better. I'll show another example. So this is BT Group, the UK telecoms giant. So really this signal really killed us. We lost 24% from this one. So the expectancy was still good. We were still profitable, mostly because we had some really good profitable trades here. This one in particular was really good. If I didn't mention it before, the yellow ones are break-evens. So if we take out these signals that were generated from 50-day lows, then we do a lot better. So we are now 100% profitable over this time range. So to conclude, the super oversold strategy can be super optimized. I'll build these findings into btfdbot.com so that it highlights really attractive potential entry points on stocks. So I'll carry on researching swing trading, especially swing trading of oversold stocks. I do have a video about the rate of change indicator. It's very interesting indeed. It's not my strategy. I found it on a former YouTube channel which is sadly now closed down. Again, if I find any new and interesting swing trading strategies, then I'll post them on this channel. Thanks for watching.